welcome to 10-Minute Investing. In this 10-minute video, I tried to squeeze in 6 steps how you can start investing this year. These are 6 steps that I took when I started investing 3 years ago, and I have invested over $32,000 so far in IRAs, standard brokerage, and 401k with my employer. And I invest every month, so I'm really keeping up with the news and education on investing, and I want to share it. So let's go. These are 6 steps to start investing. First step is identify your goal, aka how much money you want to accumulate via investing. This is important to know even before you open your investment account. Goal type 1 is you want to collect X amount of money in X amount of years. For instance, you want to collect $300,000 in 10 years because in 10 years you want to buy a condo or a studio. Goal type 2 is when you want to retire at X age and want to live on Y amount of money every year on your retirement. Basically, the difference is in the first case, you're collecting for one big amount that you will withdraw at once. And another, you are looking to retire and withdraw every year once you retire. So think about it, identify your goals. How many goals will you have? You can have several goals, right? You can collect money for different purposes, not just retirement. This is something that people actually don't know, I'm surprised. Step number 2, after you have identified your goals, you need to decide what type of investment accounts you will be opening. If your goal is retirement and you're American, either resident or citizen, you can open different tax-advantaged accounts. Americans in general have more options of investing accounts, but you can still open an investing account and invest. Doesn't matter where you live, if you're not American resident or citizen. Personally, I started investing 3 years ago when I was still Ukrainian resident, and now I'm American resident, so anybody can start investing. Still, if you are a US resident or citizen and your goal is to invest for retirement, you can open IRA account, either Roth or traditional. And I will make a video about how they are different next week, so stay tuned. And also as a US citizen or resident, you can, if you're employed, you can also ask your employer to open a 401k account for you. And 401k can also be Roth or traditional. I will make a video of how these Roth and traditional accounts are different next week. Now remember, IRA and 401k, these are only for investing for retirement, not to buy a house or a car or sabbatical. Because you can only withdraw the money from these accounts without any penalties after you reach 59 and a half years old. So if you need to invest for a house in 10 years or a car in 8 years, investing for it via IRA or 401k won't work, because you won't be able to get this money out in 10 years without having to pay a big penalty. So keep that in mind. So in this case, for all goals that are not retirement, you can open a standard brokerage account. Again, anyone from any country except those few that are sanctioned right now, people from these countries can open standard brokerage account. The beauty of a standard brokerage account is you can withdraw the money anytime and you can contribute any amount, like especially with IRA, 401k, there are contribution limits. With standard brokerage, no contribution limits, invest as much as you like, withdraw anytime. And this is why this account is the most flexible, but it doesn't give you the tax advantages that IRA or 401k can give you. Moving on, now that you know what types of accounts you need to have, you have to actually open those accounts and pick the brokers with whom you will be opening accounts. Now, with 401k, you cannot pick a broker. You will have to stick to a broker that your employer offers. But with IRA or standard brokerage, you can actually pick a broker. What is a broker? A broker is a middleman basically between an exchange where stocks are listed and you. You buy stocks through a brokerage account that you open with a broker. Like a bank, you open a bank account at a bank. With a broker, you open a brokerage account. Now, in the video description, I'm leaving the links to most popular and trusted brokers in the US. Personally, I have an account with Fidelity and I have an account with Interactive Brokers. Interactive Brokers opens accounts not just for US residents, but only if it's a standard brokerage. IRA still has to be opened by a US resident. When you go to either of these brokers' websites, you will have to find an option of opening IRA or open a standard brokerage account. You can choose either one, you can open both, doesn't matter. If the broker you found, let's say you're from Europe and you want to open an account with European broker, just find that this account is approved by SEC, which is an institution that checks brokers for their validity and legitimacy. You don't want to invest through a broker that is not approved by SEC because, you might lose your money. Step 4, fill out application on the broker's website, and you will need standard information, the same one that you would need at a bank, for instance, to open a bank account. So that would be your ID, proof of residence, your address, so like lease agreement or utility bill, social security number if you're in the US. And also they might ask you questions like, what is your investing experience, what is your income, etc. As you answer those, you will have to wait 1, 2, 3 business days before you get an email saying that your account was opened for you and you can deposit the money into it. Then you will have to check what is the account and routing number of your brokerage account is. It works the same as a bank account and routing number, and then you will have to go to your bank account on your desktop and make that initial deposit to your brokerage account using that your brokerage account's account and routing number. Now, exactly, that would work just as if you were, transferring the money from your one bank account with one bank to your other account in another bank. It's not really that much different. If it seems confusing, let me know and I will record a short instruction video on how to do that. Step 5, identify your risk tolerance before you start buying any stocks or ETFs. Now, most investors do not know their risk tolerance and they start buying stuff that they see on the internet, and then when they lose money, especially if it's a lot of money, they start panicking, they don't know why, how did this happen? A risk tolerance test is basically something that will help you identify how prone to the risk you are, how much money basically you are ready to allow yourself to lose, right? So if you invest $1,000, how much of that, what percentage of that 1,000 are you ready to lose without panic? Are you ready to lose just 10%, or are you ready to lose all 50%, like 500? So that is the risk tolerance test. Risk tolerance test is free. I recommend Charles Schwab test, and I left the link in the bio, in the description. Risk tolerance is how much money you can let yourself lose. The more aggressive, the more aggressive your risk tolerance is, the more you may allow yourself to lose. There is conservative, moderate, and aggressive risk tolerance, and there are also in-betweens, like moderately aggressive. I'm moderately aggressive. Once you take your test, you will have a suggestion of asset allocation. So basically, what percentage of stocks, ETFs, bonds, and other assets you should be buying for your portfolio according to your risk tolerance. So if you're more aggressive, you can buy more stocks and ETFs. But if you're more conservative, you should be buying more bonds. Because with bonds, you are losing less money basically once the stock market dips or crashes. I will be explaining more about this in the next videos, but let me know if you have any questions right now. And step 6, once you know what your risk tolerance is and you know what asset allocation you should be using for your investment portfolio, research what stocks, ETFs, or bonds, or commodities you want to be buying. If you're interested in investing in the US stock market, the safest bet is picking stocks from the S&P 500 list, which I left the link to the list in the description. And you can also invest in all 500 companies, so S&P 500, by buying an ETF, exchange traded fund, which is like a collection of different stocks, but not full stocks, but basically like particles, small percentages of each stock. And I've left a link to ETFs I personally own, S&P 500 ETFs and broad US stock market ETFs, in the description. Now that's honestly all I could fit in under 10 minutes. If this was useful, please subscribe and support my channel. I don't take your support for granted, and I'm looking forward to see any questions or comments from you, telling me what other topics should I make videos on, and I will see you next time. Happy investing!